You're listening to the RE Social Podcast with your hosts, Andrew and Vince from OnV Invest. For more information, go to onvinvest.com.
What's up, guys? Welcome to another episode of RE Social Podcast. Today we have Taylor. I can't say your last name.
Avakian.
Avakian. It's 25% Armenian. Is that right?
That is correct. Yeah. So I get to keep it with me, but I don't look it.
Yeah. This show is all about ancestry, and we're gonna go through everybody's ancestry. I am 100% Indian. He's totally opposite.
Deep dive and let's go.
And then Drew is 100% corn-fed.
I'm all the Europe stuff.
Yeah.
No cool Genghis Khan stuff.
Yeah. Yeah, man. Hey, Taylor, thanks for coming on the show, man. So you are from LA and you're a broker, and, we want to pick your brain to see what's happening. So for people who don't know what you do you want to give a 90-second intro?
Yeah, sure. Appreciate it, guys. So I sell apartment buildings in Los Angeles. So investment sales of investment properties for owners from 2 million, a million to 4 units, all the way up to infinity, when they figure out how to build that kind of stuff on Mars. So apartment buildings in LA. So that's my jam.
Elon Musk is seeing your contacts.
I was going to say, yeah, I'm applying for that job, that role.
Nice, man. So, so we are California investors as well. We are up transitioning to more red state. And, we definitely know the challenges of being in a more tenant-friendly state. So can you give us some of the challenges of what you see and how actually you're making it work for your clients?
Yeah, the challenges in dealing with Los Angeles and kind of California as a whole.
Yeah.
Yeah.
I know Los Angeles is even worse, but let's start with California.
Yeah, California, I think, obviously, there's a reason California is California, because our weather is some of the best in the world. And I think people recognize that, and, they flock to things like that. There's a lot of industry here. There's a lot of smart, wealthy, well-educated people who want to come to California, great school systems. So I think from an overall perspective, I think it's the 5th biggest economy in the world as well. So we're massive. And I think that has allowed itself to grow into this behemoth of a real estate investment area and arm. And there's a lot of investors who are based here in California and buy a lot of property in California and elsewhere. What I think has been tough for California, given how big we are, is really a combination of a few things, mostly one being regulations. The regulations, because there's so many people here and there's so much diversity, and, from the most poor of the poor all the way up to the wealthiest people in the world live in California. So the regulations that have to be put in place, or that have been put in place over the years, has made it a lot more difficult, I think, to really find opportunities or to maximize investments compared to other places. What I also think is unique, though, about California as a whole is because the barriers to entry are somewhat difficult. When you can build the efficiencies of having a business here and knowing how to jump through the hoops that California makes you jump through, you can really create a moat for yourself, like a niche that just you're able to make things work. Investors make money in California all the time, and they've done that since the 70s. And if you look at the trends back of what rent growth has looked like, there's been, a few years of flat or declining in California, certain areas, Los Angeles in particular. But I mean, if you look at the graph, zoom back far enough, it just keeps going up and to the right. So I think there's a lot of things to look forward to in investing in California. I think California will always be a place that people want to live. And where there's people who want to live, there's a demand for housing. And we have quite a bit of a shortage here right now. So I think that behooves itself to a lot of opportunities for people.
Yeah. Okay. So for us, we started investing. For people who don't know, we live in Orange County, close to Newport Beach in Costa Mesa. So we started buying in Bakersfield, and, we moved to Inland Empire, and we started buying in Orange County last year. We are starting to buy in Tennessee. So, for us, I would say we've been in the game for about 5 years. I would say we've easily lost more than $150,000 plus in lost rents, which we will never get back. And that's just like
Mhm.
5 years and like, repairs and all those things. And, is there a better way, like from your point of view, that is there an easier way to move tenants out, or, is there like some law that we don't know, or that's the game? Like you gotta have the money to spend for that, and then you just wait for appreciation. Is that the game?
Yeah, I mean, depending on the asset type that you have, AB 1482 buildings have something where if you do a substantial renovation, you can basically pay them the agreed upon value. Sometimes, depending on what area it is, it's $20,000 in LA. Sometimes it's a few months rent. But if you're going to be putting in a bunch of money into the unit and it's built after a certain period in LA, and then if it's not in a rent controlled area in California, you have the ability to move the tenant out. Um, However, if it is in a rent controlled area and it is something where they've are paying pretty low rent, like you're just gonna have to bite the bullet and pay them to leave, or they leave on their own. It's very difficult for you to. You're kind of handcuffed in terms of what you're able to do, and I don't think you really can get people out without paying them anything at this point in time.
Yeah, man. You want to say something, Drew?
Yeah, as someone who's doing a lot of the management and managing managers, more of my role is furnished rental, short term, midterm stuff. So luckily we don't have that issue, but I'm just kind of curious as to I'm totally speaking selfishly and just asking you about rent control. Um,
Sure.
just here in this area where we, primarily invest, what kind of rent control is in place, say let's say the state of California, zoom into LA, which is your specialty. What does that look like?
So, from an overall California perspective, recently they put in statewide rent control, and that is for buildings that were built within a period of 15 years or more, and it's on a rolling timeline. So, if your building was built before, what is that, 2006, 2007, something like that, you are technically under California state rent controlled. And what that means is you're only allowed to raise the rents a certain amount, and most of the time it's capped at around 10%, depending on kind of the city locations, and different cities can have different ordinances, but it's about 10%, which is not a small amount, but it's still something. And then when you're getting into the deeper nitty gritty rent control of Los Angeles and places like that, most of LA, besides the last 4 years when they haven't been able to raise the rents at all because there's been a rent freeze because of the pandemic, typically it's between 3 and 5%. You can raise the rent every year depending on the age of the building and if it was master metered or individually metered, and how many, like if it's water and power or electric or gas, and so certain things like that. But the average building that was built before 1978 in November is a 3% increase in the city of Los Angeles. And then if you're going on like a mobile home perspective, right, that's even stricter, which actually Northern California is the worst in terms of the rent control laws or the strictness of the laws when it comes to mobile homes, which can be minuscule. And then you got Santa Monica, which is its whole different beast, which we don't have a long enough podcast to talk about that.
Next time.
Yeah, man.
Yeah.
So for people who don't know, California statewide, they have if it's 15 years or older, multifamily properties, or even single families, it's 5% is capped, and then they allow for inflation, but it's capped at 10% total. So if inflation is 20,000%, you can only do 10%. But we also have properties in Santa Ana. City of Santa Ana came out and said you can only do 5%. I don't care if your water bill went up $2,000. We don't care. So that's 5%. So, I'll give you my perspective and our perspective from investing, and maybe you can talk about it from your brokerage side of things. Is what we've seen is, so we started in Bakersfield, we see all these regulations come in, and then, people don't have to pay rent. So you're kind of like training people to do like not good things, right? So you're like incentivizing people not to pay rent, not to work. In fact, one of the craziest stories we had was someone didn't pay rent for like a year, and the state of California decided to give that money to the tenant to not pay rent and not to us. And we were like, "Are you guys smoking crack? Like, what's happening?" They're like, "Oops, sorry, wrong checking account, but good luck, peace out," right? And, so it's like they do like crazy stuff like that. So what happens is investment, like I always tell people, this is a cool soundbite, is money always goes to places where it's treated best, right? Because money has options. If I have money, I have options. I don't have to talk to you. If you're a loser, I can just walk out and go to the next place, right? But when you don't have money, you would have to be in those areas, right? So once we started making money, we just got out of Bakersfield. So what happens now is like those kind of locations is going to be affected because investment money would not want to go there, right? Unless you're really like there and you're trying to come up with the idea. Trump had some cool ideas with the what do you call it? The opportunity zones. So we were in some opportunity zones, so you get some tax benefits there. So those kind of things incentivizes people to invest. But what are your thoughts? I want to know what your thoughts are in terms of, when they make all these regulations, they turn away investors. And, like we have millions of dollars worth of real estate in California. It's just a matter of time. We're going to move all of that to a red state in Tennessee, right? Like we probably will have this house we're talking from, and Drew lives down the street. We're going to have those, but most of the money, we're going to take it out to Tennessee. I want to hear your thoughts. And then afterwards, I want to talk about actually the advantages. We're not idiots, right? We buy in California because we know there's appreciation.
Yeah, of course. And I think most people, I would agree, are more on that appreciation side of things because of the renter demand and the costs that are associated with living here. But from a perspective, just in like a more of a tactical example, I can give you something. So I was talking with an investor, and they do pretty big deals. I think they raised maybe $100 million or something like that to go and buy multifamily, and recently transitioned into some industrial stuff. But they actually locked up a deal, and this was maybe 6 months ago. And he went out to the investor market, his typical investors, maybe 100 investors, and 50 of them had completely taken California off their table. They're like, we're not investing in California anymore. It's too risky. We don't like the returns. Like, it just doesn't make sense for their capital. So when I heard that, I was like, wow, okay. So there's a lot of very wealthy people who've invested in California for a very long time, who've decided to completely remove themselves from the playing field. And that was interesting to see, because it wasn't like there wasn't money to be made. It wasn't like it wasn't a good deal. I saw the deal. It was a good track record, or he has a good track record, and the deal itself made sense. It was just the future. The future, people are looking into the crystal ball, and it doesn't look as rosy as it's been over the last 25 years in California. And people see it getting worse. And owners I talk to every day they're like, yeah, we're frustrated. We're concerned about what's going to be happening. There's new laws that are coming into play. Vacancy control maybe on the table as well in some certain situations in cities. So I think capital realizes that it may be uncomfortable if you've only ever known California, and there's definitely downsides to certain markets. And I've heard stories of people going to Texas and getting rocked by tax increases and property taxes and insurance and a whole bunch of things, Florida included, and coming back to California because it's just what they knew and felt comfortable with. But at the same time, there are a lot of wealthy, smart individuals who are deciding to take their money and go to more friendly landlord states where they have the ability to actually own and dictate what they do with the property that they own, which in the state of California is limited, to say.
Right. And forgive me if I don't know fully what exactly your story is and what you do.
Sure.
Big time broker in LA. Check. Are we an investor?
I have some small ownerships in some apartment buildings. Yes. And the future plans are to invest. I think in the job that I have and the tax benefits of being in the government's eyes, a full-time real estate worker, I guess you could say.
Right.
It, like the depreciation and everything like that, it would be dumb for me not to invest in some real estate. However, I do think my skill set and my focus is best used to go and sell assets, to sell real estate. And when I'm hyper focused on doing that, that's when I see the best results for myself in terms of income and relationships and all the things that I'm working to build as a broker. But I'm not naive to know if there's an opportunity to make some money. Like, I'm an entrepreneur, right? I think I'm an independent contractor. I don't have a salary. I'm here to work for myself. And when an opportunity presents itself to invest in some cash flowing real estate or potential cash flowing real estate or appreciation real estate, I'm definitely going to jump on that.
If you don't mind, can we deep dive a little bit into the assets that you're a part of? Is it just passive, like it's a syndication, or what exactly is happening in your portfolio?
It's Bitcoin, all of it.
All Bitcoin?
All Bitcoin.
I'm an Ethereum guy myself.
Yeah, I have both holdings.
We go on a rabbit dive on crypto for the next 2 hours.
Gosh,
so Ethereum's the way. Dogecoin is the only way. Sorry.
Yeah. No, if we're not going to cross that bridge. But for me, so most of it's like smaller percentages where I'm a very passive investor. I don't do any hands-on management, and that's what I prefer. If I'm going to invest in some real estate, like my time is best used doing what I do, and I would rather have someone else run it and maybe make a little bit less than having to deal with the tenants and, paying all the taxes and doing all the drafts and all the stuff that comes with owning real estate. I'd love to invest in it, but I would not like to run them. So I think for me, that's where it makes sense when I can find partners or people, investors that I trust, that I would want to invest my money with. Like, those are the guys and gals that I want to do business with.
That's wise. I don't know how old you are, but you look really young. Everybody, he didn't shave today and he still looks like he's 18.
I'm 12. I'm 12.
12. He's 12. But yeah, man, that's some wisdom right there. And I think a lot of young entrepreneurs, young hustlers, just they want the whole thing, and they're going to wear all the hats. And that's a lot. That was me in a couple of things that I've done. And now, if I could do it over again, I would have for sure right away went into who, not how. And even if I got to give a piece of the equity at this point, it's like, that's the only way I'm moving forward, because I've now got the wisdom to realize I'm only good at like a couple things. Mm-hmm. And I only really enjoy a couple of those things. So it's like that's what you're saying, is that's where your focus is, selling these big assets, and then everything else you can it's just super smart. I wanted to make a point.
I appreciate that. Yeah. Dan Sullivan, I don't know if you guys are familiar with him. So Who Not How is a book that he wrote with Ben Hardy, and then 10X is Easier Than 2X. Great book. I listened to that in like 2 days. I just walked. I think I walked like 25,000 steps or something one day, and was just like, I'm into this book. And really, really cool book. And I myself am trying to implement some of those things. It's hard when you're kind of a control freak and you like the way things are done, but you realize that when you're good at something, there's a reason that you're good at it, and predisposition or that energy, whatever that oomph is that drives you to want to do that act. So for me, prospecting, I love prospecting. I love winning. Like that is part of why I enjoy this job so much. But the administrative stuff, the back end stuff, like that's not what brings or gives me energy. And so when I can find ways to delegate that to people who do find value in that and love the organization side of things and the creative side of things, like, let them do that. That only makes both of us happier and better.
Yep.
Hey, Taylor, I want to actually break down some things that you said that people might have missed. So people listening, a lot of our listeners are younger audiences in the game, and not like just age-wise, but, they might be just have a couple of doors or not many. You said something very interesting. So I want people to understand this. You are actually a professional real estate broker who sells houses, and you're in the game all day, every day for, been doing it for how many years now?
A little over 5 years.
A little over 5 years. And you literally said you don't want to actively manage a deal. This is what I want people to understand. Like, someone who is like in this game, understand everything. And you're saying, nah, not a good use of your time to manage the deal. I would rather give away whatever % of equity you have to give to concentrate on something that you're doing, you're good at, right? This is what I try to teach people or tell people all the time. It's like, if you're a doctor making $350,000, are you a freaking moron? You want to go to Bakersfield and sit on a duplex and try to make $10 and wait for it to appreciate? You might actually lose all the money you put in, right? It makes no sense. So for those guys, I always tell them, maybe do a house egg, you move into a house, live in it. You can always do some investments, maybe buy some turnkey assets, but you always want to find partners that you can partner with and leverage your money and make them work for it. That's the real game, is to make somebody else use your money and work for you, right? That's the real game. If I had more money, I would do the same thing too. I just don't have a lot of money, so I have to, do these kind of things. Do you have anything to say on that?
Yeah, I mean, like, why wouldn't you focus on the thing that is going to bring you the most amount of income and that you're good at, and let other people do what they're good at? Like, how I tell I tell brokers all the time, I'm like, how do you expect to beat someone who is singularly focused on something when you're not singularly focused on something, right? Like Kobe Bryant, love the guy, and love what he stands for. And he was maniacal and obsessed with the game of basketball, right? And Tiger Woods, Michael Jordan, these guys are obsessed. I don't see how it's possible if you were playing basketball and football or baseball, or even doing anything else, doing this media stuff or doing this and that and yada, yada, yada. Like, how could you beat someone who is singularly focused and spending all their time on one single thing? And that it goes for any endeavor, right? Like, it would be unwise to think that you can outperform someone on a certain level over a long enough time period who is singularly focused on something when you have your focus on multiple different places. So from an investor standpoint, it's like the people who are focused on finding investments, investing them, running them, raising the capital, like that is their singular focus. So if you think you're going to find better deals or be better positioned to run assets better than the person who's only doing that, like that's tough. And same with brokerage, right? If you're doing multiple things, this isn't the only thing in your life. How can you expect to beat me or beat anyone?
Yeah, I see that so often with people who like realtors. They're like, "Oh yeah, I have a fruit shop, or I also am a realtor on the side." I'm like, "Yeah, you'll always be a realtor on the side." It's like, yeah, you're not taking it seriously. It's like I could go and start playing guitar and teach guitar, but I'm not going to be as good as Drew forever, because his whole life passion is freaking playing guitar and playing in a band, right? I can play guitar, but it's garbage compared to what he does, right? So it's like the same thing. It's like I could go sell houses, I'm sure, in LA, but it's going to be garbage unless I spend 5 years doing it.
And to backpedal that, that's what all successful businesses really do. If you break it down, is they provide a substantially better service or product. That's it.
Yeah.
That's all it is. And so if you can't put most of your working energy and efforts into whatever that is, whether you're a broker, or you have a music school or whatever, or, real estate investors, it's at that point, you're just going to be treading water with the pack, and you're not going to be in that top percent that will really have the success and the win. So I agree. And that's something that I have to preach to myself, just the way my mind works. I was joking about this with Vince the other day. I'm not even kidding. I have a new business idea every single day. Every single day. So I have to kill it every day. I'm like, nope, we're not doing that. I learned I got to just stay in that one thing, in that lane that I know and what I'm good at, because I've done it. I've tried all these things. I've scattered myself. I thought, well, something will catch. And that's just, I can't sustain that. Even if I hire out all the things, at that point, now I'll be spreading so thin that all my cash is gone from the one thing that's really generating the most cash, so.
Yeah, there's definitely people who've done it successfully. And I think that they're the exception compared to the actual rule, because the longer you do something, even if your skills don't increase, which they always do, if you're continuing to do something, typically most people improve on it. Like, it just becomes a bigger lever. You just get more leverage. And that lever is really what moves the world, human capital, money, tech. Naval talks about it. It's like the bigger lever you have, the more you can move. And I think when you have that level of focus, that lever just becomes longer and longer and longer, and you can move more mass.
Yeah.
Yeah, man, that's true. And, I want to flip the coin a little bit because, I don't want people to just think that, hey, nobody can do real estate except, Taylor, Drew, and myself. So that stuff we were talking about is for most people who have a career and they always have something going on, right? Some people may not. Maybe you're working at Walmart and make like, $10 an hour. Maybe for you, it might be a good option to look into becoming a real estate, broker or something, or even an investor and learning the game, being a more active side, because you don't have something main that you're focused on. Like for me, I'm a professional engineer. I actually make six figures. Drew actually makes six figures, but I enjoy doing real estate. So I've spent like, I don't know, thousands of hours doing this because I like it. So, I tend to do that. So, for other people,
he's really understating that.
yeah,
He is obsessed. I'm looking at the books. He's read all the books. He listens to all the podcasts.
Yeah.
He watches all the YouTube videos. That's how we've grown this channel, is just because he knows everybody. And
Yeah.
he's like Kathy Fettke's coming over like for dinner. Like he's insane.
Yeah.
So yeah.
You can feel it.
And that's why we have success. And that's why, we're making something happen in a sustainable model. It's because he actually is obsessed. He's doing what we were just talking about, sorry. Yeah.
I was going to say, let me ask you guys, and I don't know as much about your guys' background or what you're doing, and you probably love what you do, the other stuff besides real estate. But if you quit those things and just focused on raising capital and doing real estate full time, do you think that you guys would be in a position to grow it to a place where it would outperform what you're currently doing?
We would destroy it if I did that. Yes.
Yeah.
Yeah.
That's literally my whole plan, by the way. Full disclosure, not to make this whole thing about us, but yeah, for me, I've kind of really had that heart to heart and realized, okay, I have an energy scale thing where I put every task I do is on a scale. 1 is it like it sucks my energy out of me. 10 is like, oh, that's just like and part of in that upper 10 category is out meeting and networking with people. I love people. I love to be social. Currently, I'm doing a lot of the management. I'm on the Airbnb app every day. I'm messaging guests. I'm still in the dirt. And I'm looking to, I'm building the system. I'm building now the team with that. With my music school, I'm putting a ton of work right now into systematizing that. Everything is super structured. It's just something that I haven't done yet. And I know I should have done it a long time ago. So everything is airtight and it can grow and expand without me. So I'm trying to get all that, shove it away. If I can just focus on going out and making genuine relationships with people who have a need to, they're making a good income and they want to do something positive with it and passive with it. That's what we do. We built a wonderful system for that. And it feels good for me. I'm good at sales if I really believe in something. And I was just telling Vince that that's really what I want to do in the next couple of years, is double down on the bringing more people into the game of real estate, but doing it in the way that you're doing it, like allowing you keep doing you keep making your money, having your fun, doing things that energize you. We'll take care of, all that stuff off the top. We'll make it go further and further than you probably ever could with just one $50,000. All right, let's see what happens, which literally we've done with some friends and my mom included. You can be an investor and a partner with us in multiple houses just with that one time. Let's see what happens. And they go straight into escrow anyway. It's like we're not seeing that, but we're doing everything around it to make that go forward and to do it passively. So, anyways.
Absolutely.
Yeah.
I mean, you've seen it a lot, Taylor, with the investment side, because you're doing mostly multifamily and the money comes from investors and, the GPs might not be putting as much. So it's the same game. But I want to get back to you and talk about, your expertise. So what do you like? All right, bro, we're in California. I want to, we understand the risks and pitfalls and stuff, right? So we know, okay, that's why we have jobs. Like we make like $300,000 to fund our crazy aspirations of investing in California, because nobody will pay us rent and the government's like, it's all good, bro. Take a break, right? But we did that and then we are moving out, so we understand the game. So for someone, let's say they only have 50 grand, 40 grand, or and there's few people how would you sell us? Try to sell us. Let's assume we don't know anything. Like how are you going to tell us to invest in LA when they don't have to pay rent?
Yeah, I wouldn't tell you to invest in LA if you have $50,000. I mean, if you're looking in terms of if you guys were buying something and someone wanted to invest with you in a deal in LA, that's a different story. And I'll answer that question too. So where the opportunities lie in multifamily in Los Angeles is based upon adding value in certain circumstances where either you can increase the rents pretty significantly, which there's a ton of opportunity to do that in Los Angeles because of rent control. It's actually kind of a floor. Like it creates an artificial floor for where your rents are going to go because they're never going to go below that. Typically, occupancy is going to stay very high. I mean, there's already a shortage of housing. So from a security standpoint, on the cash flow, it's pretty solid from that perspective. I think where you need to find an operator, if you had $50,000 and wanted to invest it in California, you need to find an operator who's done that and who understands the local and regional laws and regulations to be able to have the efficiencies in place to take advantage of that. And what I mean by that is if someone has a proven track record of being able to be successful in Los Angeles multifamily, and you can see this and you can understand how they add value to properties and the tactics and things that they do, well, then if you understand the underlying assets themselves and how they compare against other properties, if there's a good deal that is priced under market per se, they get one off market or something like that, well, then there should be enough faith or there should be enough proof to have a backstop as to like, it's going to be pretty hard to lose money on a situation like this unless everything goes wrong and just a black swan event happens, right? So I think it depends on the investor, like what their risk profile is, why they're investing in real estate, like why are you investing in real estate? Do you want cash flow? Do you want security? Do you want something to pass on to your kids? Those are all questions I would ask someone before investing in, Los Angeles or California multifamily. But in terms of security, like it's pretty hard to beat the security of the cash flow and the rental income from California real estate, in my opinion.
And then how do you navigate the tenants? Let's say you bought in a C neighborhood and they decide not to pay. You can't kick them out for 6 to 9 months, even without a moratorium. So do you tell people, hey, bro, you better have enough money in the bank to pay for 9 months for the property, right?
Yeah. Are you talking about if the tenant decides not to pay rent?
Squatters.
Yeah. I mean, we've had so many people squat.
We're traumatized. We've had squatters since we started. and not now, knock on wood.
Sure.
Good, but yeah.
We are so traumatized. Like if we meet you as a person, the first thing that runs in my mind is this guy a freaking squatter. Like immediately.
He goes out on dates with girls from Bumble. Like, hold on, is she a squatter type?
Yeah.
Is she a squatter, man?
His first question.
Yeah.
Yeah. What is your rent in Santa Monica? How much are you paying? I'm going to move in with you. Okay. Yeah. So I think most of that due diligence and stuff is done on the front end. It's very hard to know if someone, you can't see that going into a deal necessarily, but what a lot of people have done is some owners will allow an investor to talk to the tenants to see if there's some leeway, if they'd be willing to discuss tenant buyouts. Obviously, if someone's going to say yes and then squat, like there's not much you can do there. You will get them out, but having a well-capitalized partner in a GP who has a bunch of assets probably is some comfort in that, right? Because they're not going to run out of money. And then from the perspective of someone who maybe is trying to figure out how can I go add value the quickest, vacant property is obviously very ideal because then you understand, well, okay, I don't have to deal with tenants. I go in there, renovate the units, rent them out for market, and you're down for 4 to 6 months, ideally less, but depending on how many units you can turn. And then you have cash flow baked in that way. And then also, if you cap your downside by buying right, it's really hard to lose money from that perspective. It's only where you kind of just break even. You wouldn't crush it, right? If you go in there and you buy at a 5.25 cap or 5.5 cap, and you buy it at $50,000 below what the average price per unit is, or and the price per square foot's low. It's like that you could sell that tomorrow for $25K. You could assign that contract if you wanted to. But if no one leaves, well, at least you have some baked in security from that perspective. So that's how a lot of the really good operators underwrite deals and are able to get good deals and make it more protective from an investor LP perspective.
Nice.
Let me ask you a nerdy question. You would probably appreciate this. So for people, okay, for just a quick point to people who don't know, cap rate is short for capitalization rate. So what it means is if you put $100 into a property and you're going to get $5 back, that's a 5% cap rate, not accounting for the mortgage expenses. So no principal and interest, right? So that's cap rate. So that's pretty easy to understand. Now, from going to a B, C, let's just take our D properties out of the game, right? So A, B, and C, what is the price premium or cap rate premium you're willing to pay from A to B to C, right? So are you buying a C at like 7, a B you will pay 6, and then you pay 5, or like a, or like what's that looking like these days?
Have you thought about investing in real estate and taking advantage of all of those benefits without any of the work? That is something that OnV Invest not only provides, but has been providing since its inception. With friends and family, we have built an empire in a system of a wealth generating tool that is giving us and our friends and family that leverage in their life to create true wealth. Go to onvinvest.com for more to see if you qualify. And thanks for listening.
From A to B to C, right? So are you buying a C at like 7, a B you will pay 6, and then you pay 5, or like a, or like what's that looking like these days?
So that's a good question. There's a lot of nuances to it. I think just from my perspective and very hyper localized in Los Angeles. So like Beverly Hills, most people would consider that in a neighborhood.
Are there no homeless people there?
No, they have a few, but
Okay.
they ship them to Santa Monica in Venice,
Okay.
where I live. So like there's deals that are trading in Beverly Hills for, I mean, I've seen them trade sub 3 caps, but let's just say 4 cap, for example, today, which in my opinion is still kind of crazy. They probably got a good basis, a good price per unit, price per square foot for trading in today's market. Yeah, multifamily at a 4 cap. And most other places, BC, you're looking at minimum 5 cap, 4.75 if there's huge upside, or you buy a great basis. Again, the things that I think people are willing to take risks on, a lower cap rate at a certain point, like, isn't a huge metric if there's a path to increase that, and the basis, the price per pound, in other words, the price per unit and the price per square foot is low enough comparative to other properties where like there's baked in upside into the deal. So I would say, to answer your question, maybe between A and C, between 100 to 150 basis points, or 1 to 1.5% of a cap rate spread that I've seen right now in terms of those locations. The A properties have definitely, A plus, have definitely maintained more of that lower cap rate, Beverly Hills, West Side, things like that, compared to where I work, Westlake, Koreatown, Pico Union, Mid Wilshire, places like that, where it's definitely come up since interest rates have risen.
Do you see, this is a follow-up question I wanted to always know, is do you see a better or less delinquency, less squatting at the higher up you go in class, or that's not really the case?
No, it's the opposite. It's the opposite. During COVID, the owners that I spoke to, the problem tenants were in the nicer neighborhoods because like they were quote unquote educated on the system and knew how to take advantage of it, I guess you could say. Like Boyle Heights, which is a primarily Hispanic neighborhood, like all those owners were like, yeah, they paid rent every month. It's kind of a cultural thing. And South LA as well, certain areas also. So it's, it's surprising to when you think about that, but the people who took advantage were the ones paying $4,000 for a 1-bedroom apartment, on the West Side, compared to the person paying $1,400 for a studio unit.
Usually we've seen that, when people have something to lose, so the guys who are paying $3,000, $4,000, they have good credit and all these things, they usually tend to think twice before they want to, if you're an illegal
Mm-hmm.
immigrant, you're like, you don't really care. Like we just evicted someone in Mentor. I literally told the guy, hey, the cops are coming next week, right? You're done. Like it's over for you. Like you need to like run away right now. And then he was like, okay. And he did run away before the cops showed up, right? But it took us 9 months, right? So
Yeah.
it's like usually when you have nothing to lose, they tend to kind of just buy cars and not pay rent. But with these guys, I'm very curious to know that they are still not paying rents.
Yeah, that's surprising to me.
Yeah.
During COVID, actually, I'm almost positive this was a case where if you didn't pay your rent, it didn't go on your credit score. So it
But
wasn't affecting your credit in the city
but
of
you,
LA.
I know, but you had to pay all that after like whatever how many ever years. Otherwise, you're gonna get destroyed. You'll never be able to rent again.
Yeah. Well, only if so, in my understanding, you basically have to go be taken to court. And most landlords it's going to cost them more to take someone to court to go and try to get the money that's owed to them versus just letting them leave.
Mm.
And the lawyer fees and all that stuff. Like, let's say you brought up a balance of $30,000 or something like that.
Mm-hmm.
Like to get that person evicted, yeah, say it's 9 months, it's going to be at least $30,000 in fees to try to get them out. So it's like, why would I spend that extra money? Just, let them go, fly. So I know a lot of owners who didn't pursue that kind of thing. And it was just what there were no ramifications from the tenant's perspective.
Yeah, it actually doesn't cost that much, Taylor, to evict someone, but it is in the thousands. So what we do is we always start the process because the tenants won't know you're serious and they will just play games. So
Sure.
we start the process, and I definitely 100%, 100 out of 100 times, I will destroy your credit if you don't pay me. And then they usually call me back, or not call me, they call the property manager and they'll be like, hey, we're trying to buy a house, and we want you to take our payment so, we can buy a house. And I usually go, nah, I don't know. You can't buy a house. And then
Yeah.
I just tell them, teach them a lesson. But obviously I let them after like a few months. But it does tick on their credit, so it's like, it's a little
Sure.
crazy that they take it that far. And the only reason we're able to manage this is because we're very transparent about this. Like Drew and I make like, I don't know, $20,000-$30,000 a month, right, from all of
Mm-hmm.
our stuff. And we are literally funding this adventure of real estate. If we
Yeah.
don't have our jobs, we'll lose all of our properties because
Yeah.
like if we have to spend 5-6 grand a month forever, we can, but we're going to be poor. But but we can do that. But if you're not, that's why I tell people, if you don't have that capability to do that, and you're like, yeah, I'm going to buy a fourplex in downtown LA, and then they go, yeah, we're not paying rent for 2 years, you're now foreclosed. Like you have no option.
Yeah, for sure. For
Yeah.
sure. There's yeah, I would not recommend that unless you have some float, some war chest money.
Yeah. So going forward, man, like, what do you think? Like the next, couple of years, is there still opportunities for people to buy in California or LA, and since that's your main market, right?
Yeah, absolutely. 100%. There's always opportunities for good buys. I think most people make their money on the buy. So you just have to
Mhm.
have your ear to the ground, right? You have to be in the game. You have to be the person where brokers send you the deals before anyone else and be able to perform, be a good buyer. And it's who knows you, right? Some of the best principals and the most active ones, everyone knows who they are. And so they're on everyone's mailing list and they're very responsive. They've
Yeah, man.
bought some fantastic deals this year, last year, the year before. Like they've made money, significant money on the buys, and they will continue to be that because real estate isn't regulated by the FDIC, and there's almost legal insider trading, I guess you could say, because there's a knowledge gap in information, and it's not like there's a ticker symbol for the value of your apartment building. So there's ways to maximize it, and people have efficiencies that they can go and do that better than someone else.
Yeah, man, that's very interesting. I was wondering if people always like to hear like a good story. Like, do you have like a good client success stories that you have that you're like, oh yeah, this guy, he had so much, and over the course of 10 years or something, he's done well? Or do you have any of those?
I mean, a ton of people who own huge portfolios in Los Angeles started from, a fourplex, or they had a bakery and they started buying their building and then they bought other properties. And, I think it was easier back then to buy property, and it just wasn't as regulated as it is now. I have a buddy whose dad was, back in the day, like when maybe this was like 30 years ago or something like that. They had some investors from overseas in China, and they would he'd pick up the phone, he'd call an owner and say, "Hey, do you want to sell your property?" And the owner would be like, "No." And he'd be like, "Well, what price?" And he'd be like, "Well, if you bring me, $2 million, I'll sell." He'd put the phone on hold. He'd go to his boss and say, "Hey, this guy wants $2 million for the property." The boss would say, "Write it up. Let's get it done." He'd go over there. He'd pay the guy $2 million, and he'd go to the tenants and say, "Here you go. Here's your eviction notice. Here you go. Get out, get out, get out, get out, get out." And you could do that. And like that was available and possible for a lot of these investors back in the day. And they made a bunch of money. And now once you have a portfolio that's large enough, it kind of sustains itself per se. So there's a ton of owners that I work with who have hundreds of millions of dollars worth of property that started with a duplex. And it continues today too. I think it's more difficult when you're competing against those kind of people, and the information gap is a lot less, and they have the efficiencies in place. But 100%, and anyone can go and make something incredible. And I'm seeing it every day on Twitter and in the dealings that I'm dealing with owners and investors today. So that wasn't a direct story that I had, but it was one that I heard that I was like, yeah, pretty sweet.
Yeah, that is pretty sweet. Going forward, what kind of trends do you see? What are products right now trading at? Is there a lot of competition? Is this 5,000 offers on every freaking stupid D property, or
I wish.
Right? Are sellers getting used to the fact that, hey, maybe we can't sell this at a 4 cap when interest rates are at 8 cap. So, or 8% because you're borrowing money at a loss, right? Unless it's heavy value add. Do you have those conversations with the sellers, or are they still kind of like not buying it or not getting it?
Yeah, it's definitely coming around a little bit. I think it takes typically like 9 to 12 months for things to start moving and shaking. And there's been deals, but most of the good ones are from either a death in the family or, loans coming due. Like forced sellers are really where you can find some good opportunities. Not too many REO deals. I don't think that's going to be the case. And a lot of these owners of the past, 3-4 years, like they got pretty good refinance rates. So if you're sitting on a 3.25% interest rate and you have 10 years left or 7 years left, or, whatever the case may be, it's like, why would you sell? Like, unless you really had to, it doesn't necessarily make the most sense from a financial standpoint. Now there's other factors why people sell and buy that are not necessarily for the monetary value, lifestyle, things like that. Right. But we're starting to see that turn a little bit. And I think next year it's interesting to say, anyone who predicts what's going to happen is full of themselves and has no idea what's going to be happening. But from an overarching theme of what a lot of people in the industry are talking about is next year, they feel like rates are going to be coming down, which would be good for a lot of people. And I think pick velocity up tremendously. It's slow out there, man. It's some deals that, I would have thought would have traded, yesterday are not trading at all, just sitting on the market. And then deals where you're like, I don't know, maybe are getting snatched up. So it's a very unique situation. I think in the market, we're still in that discovery phase, and that'll continue till the end of the year, in my opinion. But there'll be plenty of opportunities for people to buy in. There's, billions of dollars have already traded in Los Angeles this year. So obviously things are happening still.
What about the, as people who are listening, most people know mortgages as 30-year fixed residential. So that's 1 to 4 units. As almost no loans for 30-year fixed with commercial. They're usually fixed for either 5, 7, 10. They could amortize it over 30 years, but you would have to refinance, right? Now, there's also bridge loans, which is due in 18 to 3 years, right? So all these morons who got the loans at like 2% at 2021, What are those guys doing? Do they like flee the country? Or like what's happening with those loans?
Yeah, they're sweating.
Yeah.
I
They
think
should sell at a discount, right?
depending on how well capitalized you are, what
Yeah.
your LPs are going to be looking like. I mean, most of those guys are either going to have to do a cash in refinance, which they'll have to raise money, kind of what Tides did, the big company that was all over The Real Deal. You're going to have to either sell or you're going to have to make some sort of change. Otherwise, yeah, it's just not, you're going to be losing money hand over fist when your interest rate's 8% and you bought at a 4.5 cap and no one's moved, right? Most of these people were underwriting like 6.5% stabilized yields when you were getting debt at that price. So it was less of a spread in terms of the NOI.
Yeah.
Every like quarter point NOI has to increase like 17% to account for what that difference is. So in a rent control building, that's really tough, So I think a lot of these people are figuring out ways. Banks don't seem to be as heavy handed with foreclosing as they were in 08, 09, from what I've been told. And so I think there'll be not as many distressed assets as it's not 08, 09, but there still will be opportunities and people are still losing property. And, you got to find a workaround. You got to be entrepreneurial or creative to work through those kind of situations.
Yeah, it's very interesting, man. Like I actually, my family owns like a 2% of a 44 unit in Lakeland, and I'm a GP on that one. And that deal, we closed end of 2021. That was still, interest rates, I don't know, 4.5 or something, but it is still fixed for 5 years. So we don't have to worry about it till January of 2027. So it's still a pretty good, but most of the deals that we, Drew and I own in our company, we have about 12 or 13 deals still, and they're about 24 units. They're all 30-year fixed, and most of them are under 5%,
Wow.
So it's people are like, oh, bro, you're not making a good deal, and you're playing it safe. I'm like, yeah, bro, everybody else lost their houses. Like it's all, it's like, I don't care. I know I can cover this mortgage for a long time because that's fixed. And I can increase the rent, like you said, in California, it's still 10%. I can increase it.
Yeah. If you can get, I mean, if you were able to buy property like that, homes or sub 4 units with conventional financing, like, man, that's a good position to be in. It's going to be very hard to not be in a good position with the way that the rents are growing and the economy and things like that. And yeah, when you're fixed for 30 years, it's a slam dunk.
Yeah, like even the house that we're talking from right now, this is a Costa Mesa house. I can't afford to buy this house today. I locked this for 30 years at $399.
Yeah.
My mortgage is, I think, like $6,100 or something. I have an Airbnb in the back, and but right now, if I bought the same house, it will cost me almost $9,000 plus. I won't be able to afford it, So it's like people told me like, oh, you're buying at the height of the market, you can't do it. 2017, 2018, when we started, what did they tell us, Drew? Oh, it's too high.
I mean, the whole our whole journey has been filled with naysayers and don't do that. You should wait. Everyone's trying, And of course, it all comes from people who are not doing very big things. And we can hypothesize where it was coming from, and I think it was coming from a good place of maybe an uncle's tried it himself and got it destroyed. But yeah, no, the whole time we've been told, don't do it. And, even bumbling through our first deal and making mistakes, and, we still came out with a profit. So, we're very lucky. And speaking of LA and California, man, that appreciation just it's nice. It wipes the slate clean. It washes your sins, son.
Yeah. One of my favorite, quotes or stories, which I think kind of embodies what you're saying is the Teddy Roosevelt "Man in the Arena" quote. I get some this sometimes because people love the on motivation stuff, but genuinely the "Man in the Arena" quote, go look it up if you haven't read it, but he's basically stating like, you can't judge the people who are actually in the arena fighting unless you've been in the arena. Like the people who are actually doing it day in and day out, they're fighting, they're getting blood on their face, they're working hard, right? They're in battle. Those are the ones who are to be celebrated, not the ones who were too afraid to actually jump in. So I love that one. That gets me pumped up. I have that quote in my room at my house. I got quotes everywhere. I love that stuff. But that really kind of feels like that summarizes a little bit of your guys' experience too.
I'm a total like self-help nerd, by the way. Like I love all that cheesy stuff. This is probably my favorite quote of all time, actually. And
which one?
I mean, let me just read it. I'm gonna read the whole thing.
Okay.
It is not the critic who counts, not the man who points out how the strong man stumbles or where the doer of deeds could have done them better. The credit belongs to the man who is actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, who errs, who comes short again and again, because there is no effort without error and shortcoming, but who does actually strive to do the deeds, who knows great enthusiasms, the great devotions, who spends himself in a worthy cause, who at the best knows in the end the triumph of high achievement, and who at the worst, if he fails, at least fails while daring greatly, so that his place shall never be with those cold and timid souls who neither know victory nor defeat. Oh, I got the chills.
Amen, baby. Yeah, wow. I love that.
That whole thing, like, there's no fluff. It's all like, wow.
Yeah, dude. Some of those people, I love. I'm a big nerd for that stuff too. Have you guys have you heard David Senra's podcast, Founders?
No.
Oh man, dude, great podcast. I'm obsessed with like learning. I guess human optimization would be a phrase that I would say I consider myself one of my ands. But dude, there's some, he basically dissects a bunch of high performers and high achievers throughout history. And like the throughput through all of them is crazy. And I use that as motivation, and it gets me pumped up, and I listen to these stories and whatnot. So that's a great one for anyone who likes that kind of.
That was called Founders.
Yeah, Founders, David Senra.
I'll check that out. And then you mentioned a book that it keeps coming up in my Audible recommended reads. 10 times?
Oh, 10x is easier than 2x.
10x is better. Yeah, it is easier than 2x. I got to read that. I mean, just based on what you were saying about like going for that, walk and just like consuming it. There's been very few books where I'm like, oh, I have to move everything. I need another 2 hours on this.
Yeah,
I'd be excited to read that.
What's interesting on that one is basically they talk about how like in investors, right? Like venture capital people, right? They make bets that have huge upsides and maybe smaller downsides. So maybe the downside's like 5x and the upside's 1,000x or 100x or whatever they're underwriting to. Like those are the outsized bets that they take because all they have to do is win 2 out of 10 or 1 out of 10 and they make all their money and then some, right? So it's finding those bets. And actually, if you're putting your effort into like hyper focus into those things, it's like, well, yeah, then there's a highly likelihood that one of those is going to hit and you're going to succeed. So putting your energy into the 10x versus the 2x opportunity, I think is kind of an overarching theme of the book.
Interesting. Yeah, I definitely will be purchasing and reading that one next. I've been crushing through books lately, and
I'm a nerd for all that stuff, man.
It's interesting, and I'll get in this probably from the same sphere of friends who are a lot of naysayers are also non-readers. Interesting, right? And I'm just obsessed with reading, and it's the weirdest thing to me. I've got a couple of unpaid interns who kind of just do little stuff for me on the side. One of them's coming around and finally getting it. I think his pain points got to that point where he realized, okay, maybe Andrew's right. I should start. Well, one of the first things I do is I start just telling them to read. Like I give them reading assignments. And if the next time we meet and I'm asking you about what you learned and I've got 2 chapters in, which just happened, by the way. What are we doing, guys? Like every mistake you've ever made came from a lack of knowledge. Every war ever won came mostly because of superior technology, therefore superior knowledge. It's wild to me how many books are out there disseminated from someone who just achieved great things and said, hey, here's how this is my head, best I can do. Blue pill, right? Or whatever it is, or red pill, whatever pill, whatever color pill you want. It blows my mind how few read. And it's just like, I don't know. So just to kind of talk on that, maybe that's why you're crushing it, because you are a reader. I find that to be quite common of a theme. What were some of the first books that were just like, that maybe gave you that hyper speed, or it's just said that one thing you needed to achieve where you're at now?
You know, there's a lot of books that have influenced me. And I think some people can get carried away at wanting that feeling of feeling accomplished by reading a book and not actually putting it into action. And I've definitely been someone who's done that in the past. And I think what really switched it for me was when the first book that I read that really, I was like, wow, this means a lot to me. It was not a real estate book, anything. It's called Awareness by Anthony DeMello. And it was in a point in my life where I was still trying to find myself. I was very singularly mindedly focused, and was growing into my maturity as an adult. And so that book in particular really changed my mindset and a lot of things. And what was helpful about that, and the place that I was in my life, is I was surrounded by a lot of people who felt the same way that I did. And so we were able to relate through that, and that bond and that friendship. And I'm still friends with those guys today. Like, that was deep. That was deep when we felt that. So loved Awareness by Anthony DeMello. I actually listened to it on Audible because he speaks it, and it's fantastic. Another tactical book. And then for me, I love tactics, and I think human language and the way that we speak and communicate. And it's something I'm always working on improving, because if you can control a story and be able to tell something, we're all humans. And so we all relate in different ways, and we have different ways of communication. So like Chris Voss's Never Split the Difference was, I remember a book that when I read that, it was a different perspective than anything I had ever been aware of or heard of previously. So that one definitely took some tactical advice from. And another one, the Sandler method, Sandler training, cold calling, stuff like that. Antonio Garrido is a guy who's done that, and he has some training stuff, and he's been very influential on my life and helping me. And I work with some coaches and things like that, just because for what I do, I am competing every single day against a ton of other very smart, well-connected individuals, and we're trying to do the same thing. And so if I'm not getting better every day, then I am losing the game that I'm playing right now. And so for me, that motivates me to continue the growth mindset of like, what can I do to improve where I have a higher chance of winning in the game that I'm competing against, or in the game that I'm competing in, and the competitors that I'm competing against. Because like, people ask me all the time, they're like, why real estate? Like, why? I was an athlete growing up. Competitiveness was in my nature. But you could be doing anything. Why real estate? And I think I sat down and I realized I love winning. Winning is what drives me and what keeps me in this business. And either if it's from a principal perspective or from a broker's perspective, it's like the opportunity to have better skills or better communication or better follow-up or something that increases the likelihood of you winning that deal. That for me is what I love. That's what gets me going. So like, all the books, I've read everything under the sun, and you have to go and implement them. But those tactical things really, really have allowed me to continue the growth and continue where I want to go, which is a very high peak, and probably not a summit that I'll ever be able to get to, but it's great to be able to picture that and to have something to go after.
I have a very similar mindset, and I just love to win. I have this obsession with being the best at whatever. Like, I don't have game consoles in my TVs. They're all like stuffed in the back of a closet, because once I start, like, I won't stop. I think that's anybody, but I wouldn't stop playing a video game or practicing something until no one wanted to play me. It was like, it's probably a total ego insecurity thing. I don't know, but
Sure.
that's kind of where, and I
Yeah.
took that into business, and I love that you did the same, and you came in from an athletic background. What was your sport, by the way?
I played a lot of stuff when growing up. Eventually, my last sport that I played was baseball. But I played
Nice.
every sport growing up, and was just kind of like part of my identity back then. So I
Got it.
shifted it towards real estate, I guess.
Great.
Yeah.
Gotta get you on more some of investments, dude. Gotta
Yeah,
on the
man.
investment side, man. That's all we do. You know, we try to educate people to get on the investment, and we talk to experts in every field. You know, so you're an expert in like the brokerage side, which is really good because you know you want to have a. I always tell people you need to have a high income job, and then you know that high income will pay for your lifestyle now. But if you want to pay for your lifestyle later, you would want to start, you know, portioning some money into some real estate or whatever investments you see fit. I wanted to close with something that I wrote down that you mentioned. A lot of people might have missed. You know, we were sitting and like basically shitting on California while we live in $1 million houses in California. You know, so I just wanted to give some upsides of investing in California. You know, so we talk about all the negatives of California a lot because we want people to understand this is the game. That it's like telling, oh, you know, that chick, she's so hot, she's probably a. I'm like, okay, maybe, but she's hot. So if you want her, then you got to learn how to play the game to approach her. Oh, she's all into looks. I'm like, yeah, she's saying that she won't sleep with if you're 500 pounds overweight and don't have a job and live in a basement, right? So maybe you have to update your life. So it's like similar stuff. Like if you want the game of California, there are certain rules that you have to play. What are the rules? You would have to be able to spend money. Like Drew and I, like I said, we can eat 4 or 5 grand rest of our lives if we have to, and we will come out being multimillionaires because we can keep it going, right? But if you don't have those means, then you should not invest in California, right? So I wanted to break down real quick and get your thoughts about it. So there are 3 types of market. This is from my good friend Jason Hartman. He talks about it a lot. He's been on our podcast. I've hung out with him. Really cool guy. Do you know who Jason Hartman is?
I don't know.
Okay, he's a single family guy, but he's from Irvine, but he moved to Florida. But anyway, so what he talks about is there's 3 types of markets. There's the cash flow heavy market, then there's the appreciation market, and there's the hybrid model, right? So obviously we know California is appreciation market, right? So he argues that's gambling, right? It could go up, go down. But if you look at the last 50 years, it's been going up 5-6% a year for the last 50 years, right? Since World War II, whatever. Now, if you look up cash flow model, it's going to be the Midwest, the Kansas Cities, the Ohio's, you know, those game is good for cash flow. But if you want cash flow, that's the game you go to. Now, for Drew and I, we have cash flow, not from real estate because he's he's got a music school. I have an engineering gig. We're not dumb. We're reasonably smart, so we can have that, right? So we don't need the cash flow, right? Because our goal is to become wealthy. Now, Drew would probably argue for the right reasons that I went a little too crazy on the appreciation game, and I got myself into all these issues because there's so much, it's burning so much cash, right? But we're getting better now. But I'm saying, so if you want the cash flow, those cash flow markets do not give you the wealth building stuff. Like, you know, my buddy, like, he bought some stuff in like Michigan, and I have some buddies who bought it in Kansas City 4 years ago. It's about the same amount of money. It's a total freaking waste of time. Like, what did you make? Like $10 a month in cash flow, and your HVAC went out after 4 years. You made $0. Why are you even talking to me? It's a waste of time. Like, your house is 100 grand. My toilet is worth more than 100 grand. Like, it's not even a go starter, right? So that market is not good if you want wealth, right? Then there's the hybrid model. The hybrid model is what I'm really interested in. It gives you enough cash flow, but there's also demographics going in. There's people are building. It's business friendly. It's a red state. You can evict people if they're like smoking crack, and you don't give them crack pipes, right? So those are the markets we like. So that's Tennessee, that's Florida, that's Georgia, that's Alabama, right? All the red states, Southeast Bible belts, right? So that's the game you want to play. So do you have any thoughts or any reasoning on those kind of things? Does it make sense?
Yeah, no, completely. I think from a perspective of where you can, again, talking about leverage, move the needle the most, really in any market, right? It's where There are properties that have rents that are below market that you can go and increase them to get them to market, and increase the NOI. And if you go do that across any real estate asset, no matter if it's in any one of those markets, you will make money, barring interest rates jump 700% basis points, right? But from a cash flow perspective, you will. Like, the value add game, in my opinion, is the safest type of investment, because you're hedging your bets. It's kind of like a hedge fund from an investment perspective, because you have the ability to get to a better place and increase the value of something with actual force, instead of waiting for time to do that. And so I think from a safety perspective, and where I would look to invest if I was, trying to buy deals wherever it was in the country, can I add value to this property? Can I be a force to increase the value with forced appreciation versus waiting long term? And then obviously diversification. If you feel like, hey, I want to diversify my assets and do that, and have a couple assets in California, I have a couple cash flowing assets here, I have a couple hybrid model properties here, test that out too. I think everyone's got different risk profiles. But yeah, knowing yourself, knowing what kind of investor it is and how much time you can put into this will, I think, dictate which one of those routes you end up going to, or which sponsor you end up partnering with, because you like their business model and you like their performance and you like what they do. So I think that's my thoughts on that.
Yeah, man, it's really cool. How, over, like, you probably have done this in your career too. Like, you start off doing some things and you learn stuff on the game, and you might be like, I don't want to talk to this kind of buyer or seller because they're going to waste your time or whatever. So we've learned a lot of things. We went for the high cap rate in like C minus neighborhoods, and you find out, well, actually, if you increase the capex expenditure, which doesn't go into the NOI calculation, oh wait, the cap rate is actually a scam, and you're not making any money. Might as well stick with like B and A. So we sold almost everything from Bakersfield. We have one property left that makes $500 a month, so we don't really care. It's locked at 3% for 30 years, right?
Yeah.
So we'll probably sell it at some point. We have like 150 grand in equity on that. But we just learning for ourselves. Like, for me, I've taken on too much stress by kind of like supporting financially, like the houses, because all this appreciation, you have to pay a lot, right? So it takes too much stress. So Drew and I decided last year that we don't want to keep doing this, so we moved to like the Tennessee market, right? So that property, just quick math, it's we bought it for $650. We furnished both sides. Each side rents for $3,000. Our mortgage is like $3,500, right? So we're making $2,500 a month, and we've put in maybe 200 grand, right, into the property. That's over 10% cash on cash, right? That's really good. That's right now. Now that's it's like completely redone. It's like it looks brand new, remodel, right? It's the 1980s build, but it's remodeled, better plumbing, better roof. The new one we just got into contract yesterday. That's a 2023 build. It's getting built right now. It's being done like next month, right? That's like, you think that's going to have capex? No, it has 10-year builder warranty. Like, we don't care, right? So we're kind of transitioning to that, because we kind of like, we played the appreciation game. We're still going to collect a lot of appreciation from California, but that's what I want people to take from this is like, if you can play that game, you have the patience for it, and you're a doctor or whatever, you can support the cash flow, you can support the property, you can feed the property, like they say in the industry, you're going to probably win in the long run, but it's going to take a lot of emotional strength and stuff to just kind of keep doing that.
Have to have the finances for it. Have that contingency plan A, B, and C. Hope for the best, prepare for it. But there's why what you're saying about and your kind of demographic, your neck of woods up in LA, you're seeing it work every day with guys. It's just a different strategy. It's a different special set of skills. And how would anyone get in touch with you, by the way, to get in that LA deal?
Yeah, man. You can reach out to me if you look up my name, Taylor Avakian. Hopefully all of my contact information, it should be on there. LinkedIn, Twitter, if you just type in my name, they should all be available. I'm on most of the socials. So just shoot me a message, give me a call. I love picking up phone calls. So I'm a big proponent of calling. So yeah, give me a call, shoot me an email, shoot me a text, whatever it is. And happy to talk deals.
Win.
Yeah, man. Let's do some deals. I'm a
Do you
deal
only
guy.
do-
So
Do you only do 5+ or do you do 1 to 4 units too?
it depends really on how quick I can sell. Because from a time perspective, right? Like you sell a $1 million building and 60 grand, let's say you get 6%. Like that's not a bad paycheck, but I think for me, the time value, it takes just as much effort to sell a 4 unit as it does a 40 unit, in my opinion.
True.
So I'd
But do you have
rather
longer escrows though with the 40 unit? It takes usually 2-3 months, right? No.
no. I mean, you'd be surprised. Definitely it can. I've closed deals in 7 days. So it's yeah, I think it's
The
all about
LA
the
money.
deal. Yeah,
Yes.
man.
Yes.
California, we got the big pockets for sure.
That's awesome, man. Well, thanks for coming on the show, man. Do you have any last thoughts or are you good?
No, I appreciate you guys very much for having me. I guess I would leave the listeners with a quick analogy. So success, right? Like someone once told me this and I was like, oh, that's very interesting. So if you think of success as like a bowl of spaghetti, right? When the spaghetti isn't cooked, it's just a bunch of straight line noodles and like from point A to point B. And then when you cook the spaghetti and you pour the cylinder into the bowl, they're all crisscrossed everywhere, right? But if you're looking at that from the example of where they all get from a direction, if the end of those is success, there's a million different ways that you can get to success in life. And it's all about, in my opinion, and what I'm choosing to do is just focusing on that one thing that brings you the most amount of joy, that you love doing, that you're good at, and that brings you in money to where all of those combinations, you can become successful. So there's no one path. There's no one right way. There's no overarching theme. It's just like, do you figure it out, mess up, but keep pushing forward. And the person who who never loses is the one who never quits. So just don't quit.
Love that perseverance.
Awesome,
Get
man.
in the arena. Is
Yes.
what
Get in
they
the game.
say.
No, I appreciate you guys very much.
Hey, thanks, man. If you're ever in Orange County, hit us up. We do monthly meetups. It's always free.
Yeah,
So
absolutely. I would
send you
love
the
to.
date for it. Yeah.
Yeah, we'll add you to our mail like newsletter stuff. So
Yeah, please do. Please add me. And if you guys are up ever in Los Angeles, dude, hit me up. We'll go grab some coffee or we'll go tour some deals, even though you're not
I
buying
love
here.
that. Thanks, man. See you, dude.
Hey, appreciate you guys. Yeah, have a good night.
Thanks, man.
I don't know about you, but I definitely like to see 5-star reviews on any service or any product before I purchase. Please take a second to leave us a 5-star review, whether you're listening to it on Apple, iTunes, or Spotify, or whatever platform. Take a second, goes a long way, helps us a lot to grow the channel, and thanks for listening.